I'm Marcus Wright, and my co-panelists have already been introduced. I'll give them a chance to say a little bit about themselves in a minute. This session is about the rapid growth of the fintech industry, with a particular focus probably on Asia. And so I think I'll start off by asking each of the panelists in turn, maybe start with Dusan, to describe the areas of the fintech industry that they see as the best opportunities for growth or for companies to get into, and then a little bit about what your company does, what your venture does.
So I'm a little bit biased in terms of the areas that I think are the most fascinating, because obviously I invested in those areas as well. But by far the most interesting area that I think is to be invested into right now, in Asia in particular, would be anything that is linked to distributed ledgers. I think the largest opportunity is actually here in Asia, and I think there is fairly little competition if I would compare to New York or London. So for me, it's kind of blockchain, 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 or actually distributed ledgers, distributed ledgers, distributed ledgers. And the second area that I believe in a lot is anything that is linked to cognitive computing, machine learning, AI. Same there, I think that's a very, very strong Asian opportunity again. A little bit similar reasoning, not that competitive as it might be in the US or in Europe. So same kind of reasoning why. And what do we do in True Global Ventures? So we are basically a consortium, I would say, of 40 super angels who have all done a tech exit, and that are on average 25 angel investments. So together we've done about 1,000 angel investments individually. What we've decided to do is that 2 to 3 investments per year we do really together, and then basically we try to position ourselves like a rocket internet for B2B fintech. So we just did an investment in Bluzel, 2 Canadian entrepreneurs that came over to Singapore, and basically what we've done with them in the last 2.5 weeks, we've taken them to Beijing, Hong Kong, KL, Singapore, San Francisco, and Stockholm in 2.5 weeks, visited 55 banks and insurance companies, and closed 6 deals. And that's basically the hardcore sense of True Global Ventures. And given that it's a little bit time consuming, we can only do 2 to 3 deals per year.
Shailesh, do you want to
Thank you. So to your question about which areas are perhaps the best or most interesting for people to enter into fintech, can I perhaps just ask how many of you are from banks? Hands up from banks. Anyone? Okay, very few. Apologies in advance, I'm going to offend you repeatedly over the next few minutes. So the biggest area where I think there are opportunities in fintech is anything a bank is doing today. Absolutely anything. Just look at your bank, look at what they're doing, and I think all of them are ripe for disruption, whether it's payments, treasury management, customer service, anything at all. The primary reason for this is I think that banks have failed, not all of them, many of them have failed to take advantage of the new technologies, have been so caught up in all kinds of other issues that they just have not grasped what's going on around. And that is, I think, that our lives have moved into this little mobile phone, which is a connected computer, and so much more can be done. You don't have to go back to a website, you don't have to go to an ATM. So that's just from the consumer side, but anything else that a bank is doing is ripe for disruption and attack. That's on the sort of global level, and then at a very local Asian level, there are many, many things that go on in Asia which are perhaps unique to this part of the world. Lending clubs in the Philippines, social lending in Thailand, and so on, or P2P lending. And we're seeing many entrepreneurs step up to now bring these traditional models onto the internet, onto mobile, and therefore enhancing the quality of life. So whether it's where the banks are or where typically Asians have had a certain kind of lifestyle, both of them are open for disruption. Matchmove itself has taken a specific focus around payments. Many of you know there's only 3% card penetration in Asia. How the hell is Uber going to grow with just 3% of people having cards to pay for the rides? You're trying to book airline tickets, you're trying to do everything. In fact, you can, from pizzas to airline tickets on your phone, but to close that transaction, you still at some point need a medieval concept called cash. And what we're trying to do is digitize that. Our business model is essentially OTT, just like the online streaming companies like Netflix and others have destroyed television stations by going over the top. The reason why telcos, for example, are suffering by these so-called OTT services. Matchmove is essentially becoming an OTT financial service in the cloud. Now, this brings all kinds of questions about regulation, about security, everything else. We have been systematically addressing these, and as a result, we're currently bringing between 0.5 to 1 million people, new people, into the internet economy for the first time. We are adding about 500,000 people every month in India who are now able to make purchases directly through their mobile phones. And we're very much on track to have about 50 million users who've never transacted directly through their phone for the first time in Asia.
Move to Benjamin.
Yeah, thank you. Definitely, there's a lot of excitement, as my two fellow panelists have just described. It's blockchain, AI, and a lot of fintech technologies that is slated for disruption. And look at the crowd here, right? It's just so many of you just waiting to capture this opportunity. In Greek, the definition of Greek, there's two types of timing, right? One is called the chronos, which is the sequentials of time. And the other one is the kairos, which is the supreme event. So where everything is changing and something is slated to happen. I just want to make sure that I mention this. Guys, we are in a kairos event that we really need to take note. And as the tables are turning, there are banks that's right now smiling to the comments that you have made, and there's disruption, the attack methodology that the fintechs are targeting at the traditional banks. From VKey's standpoint, it's all about the building up the ecosystem, right? At the end of the day, yes, each buddy can take each other's lunch. But where from VKey for the last 5 years we have been focusing on is the foundation of trust. That's absolutely important. Foundation of trust, as earlier Minister Vivian has mentioned as well, is one of the key critical success pillar for any project to be successful. So be it be blockchain, be it be new lending, new peer-to-peer lending, new treasuries that you have, you need the basic KYC, knowing your customers, knowing your companies, but more importantly here is about digitizing the value of the trust that you have also placed to technology companies as well. And this is where VKey, our focus is in the area of mobile identity, authentication, and authorization, where right now, everyday usage of your physical credit cards that have a chip and PIN. Anyone here do not have a chip and PIN? Okay, great. Everybody here is using the chip and PIN. And we have the global patent that virtualizes the chip into software. So your current limiting factor of the physical form factor, either on your card or your SIM cards, is right now unleashed digitally within mobile applications. Be exciting fintechs that's trying to eat the lunch of the banks, that's trying to rule the world. We say amen to that. If it's the new disruptive blockchain from the traditional banks that's trying to adopt, we help you to get in compliance quick and fast with the central bank. And that has been keeping me busy. We're being invested by Ant Financial. We're supporting that 250 million users transacting billion over dollars a day. We're working with also the large banks, 2 out of the 5 safest banks here in Asia, helping them to digitize their digital assets. And of course, I'm in Smart Nation as well. We are the first software secure element to be accepted by a government. Let me just repeat that again. Traditionally, government accept only hardware form factor. And I spent 5 years to do this, so I'm going to repeat that again. We are the virtual secure element in software to be recognized by a government. Thank you.
I hardly dare admit that I still use checks every month to pay my electricity bill.
We'll get it digitized very fast.
Ron, would you like to?
Sure. So, I mean, you asked about problems in the market and opportunities for innovation in fintech. So in Philippines, actually, there are more people who have Facebook accounts than bank accounts. So I don't know how many people are familiar with statistics, but less than 30% of the population has bank accounts, and the numbers look actually very similar across Southeast Asia. So if you look at Southeast Asia as a whole, 620 million people, and less than half of them are banked, less than 5% credit card penetration. We started Coins.ph about 2 years ago with a very simple mission, which is to enable anyone to have direct access to financial services, and at the same time actually allow financial institutions to connect directly with consumers in a cost-effective way. We have the underlying belief that banks actually are good. They want to serve customers. The challenge is with technology. So if you look at a market like the Philippines, the reason that so few people are banked is that the traditional model just doesn't fit well into the market. If you're going to provide financial services over a bank branch, your costs are just too high. Branches, tellers, armored trucks, it all costs a lot of money. And in contrast, you're going to be dealing with customers who have fairly low savings rates. So every time the customer is walking into the branch, you're going to be losing money. What I urge all of you to think about as you're building your business is what's actually changing now, what's making all of this possible. And it's really three key things that we see that are enabling this, this revolution. And that's the fact that customers are directly addressable. So you can actually provide services to anyone over mobile directly without having to go through intermediaries. The second one is technology. So on the technology side, we have things like blockchain, distributed ledgers, et cetera. It allows us to build fast, efficient financial railways without necessarily having to be tied up to the existing infrastructure. And the last one, which is equally important, is regulatory and trust. So as you all know, there is a lot of motivation within central banks and within government regulators to drive financial inclusion. And that is driving investment, it's driving support of financial technology, it's driving will to experiment with new trust models, new ways to KYC and authenticate customers, and all these three things together actually are building a very healthy ecosystem for fintech right now.
Well, we're starting to get some questions coming in. I think I'll throw this one to Dusan. What will change first through blockchain technology?
Well, a lot of things have already changed through blockchain technology. Let me give you one concrete example. I had, or I still have, a portfolio company called SharesPost, where we together with Nasdaq had a joint venture called Nasdaq Private Market, where basically we executed trades in private company stock through a blockchain. And now after that pilot that was done at Nasdaq Private Marketplace, Nasdaq is actually taking it one step further in terms of executing these trades on the blockchain. So that is already happening. So there are quite a few things that are already happening. The second piece that I think is already up there is really payments, especially B2B payments, are already partly done over Ripple, as you probably many of you know. So I think these two are early adopters. You know, something that takes long is very cumbersome of moving shares from A to B. Moving a payment from A to B, which can take 3 to 7 days, are typical user cases that can be instantly solved with distributed ledger technology. And I think, you know, the imagination of how much can be sold through the distributed ledgers is way beyond financial services. It's all about non-financial assets as well. It's about if your painting is true, is the gold and the diamond true that you are seeing, are the ingredients that you eat correct, is the pharmaceutical and the medicine you're actually eating the correct one. It's way beyond financial services. So for me, it's actually rediscovering, you know, a new internet coming now in this year, full time, and the timing is perfect because people are actually adopting it. So I would love to see, you know, NUS and NTU and all the professors around Singapore actually asking the kids from 7 years and all the way to university students to just innovate around it and do loads of experiments.
One for Shailesh, I think. There are so many people doing payments. Do you think that there'll be synergies, and do you think the market will evolve to a few dominant players, or do you think this sort of fragmentation will continue?
Yeah. So, you know, payments is it's a very large area, and there are many people. Payments is a very large area, and there are many people doing payments. A lot of them aren't doing it very well, and that's why more and more entrants come in, because the current players, and typically again, sorry banks, but it's really the banks and the telcos who've tried and created all these payment systems which have failed. So I do think that there will be many more payment methods, opportunities arising. I think those that will win are those that are mobile first, that have from day one digitized eKYC and authentication, rather than layer it on top of what they have. But then also, as Dusan says, build it around the blockchain and distributed ledgers. That's the new age of payments. So to answer the second part of your question, yes, I think there will be a consolidation, but it will be around these mobile first, day one digital authentication, and then built around the blockchain.
And what will be the role of the banks in this process in, say, 5, 10 years, do you think?
Well, I think there's, again, there's going to be a few banks that have built a brand and they'll probably survive on it for some time. There are a number of new age banks who have recognized that keeping pace with the innovation, keeping pace with the investment required, but most important, engaging with the new minds that are thinking differently will be too hard for them. And I think they will retreat back to where they should be, which is compliance, wholesale banking, and managing large volumes of cash. But once again, they too, I think, will suffocate and die if they don't take on the new technologies like blockchain and distributed ledgers, because that's going to level the playing field.
Just to kind of disagree a little bit with Shailesh, because I always kind of agree with whatever he says. So to just disagree a little bit on that point, I think there are some banks, like, let me give you a concrete example here, that I was just in Beijing and I was deeply impressed with ICBC. So many of you know maybe that ICBC has actually started the third largest e-commerce company in China, actually obviously inspired by Alibaba. So they've done something that I thought banks would never be able to do. They come on the front end and capture actually the data from the consumers before, whereas if you would have asked me if the banks would be capable to do that, I would say they would fail, but they haven't. And they're even exporting that model outside of mainland China to New Zealand and others. So I was very, very impressed with that. So I don't think the question of where the banks will be positioned is that, clear. If you would have asked me 3 weeks ago, I would have said like Shailesh, when I saw ICBC, I had to change my mind.
That is quite an unusual development, though, right?
If Dusan says that, I have to agree with him.
I just want to add on to Dusan's points as well, as we have been working very closely with the banks as well, right? And there's obviously early adopter banks, and there's middle, and there's late, right? But for the early adopters banks, like for example DBS, that we're working very closely, we've just launched their new digital bank in India to serve the lower spectrum of the clientele groups that they want to target in India. But very much this was a top-down initiative where it's very interesting, and I'm going to share this, where if a digital banking team adds 1 head count, well, at least 2 head counts from your traditional side of the banking needs to go. Okay, and that's a very important point, right? As you want to place bet, and you said that this is real bet and not just some marketing and setting up some innovation lab to make sure that people recognize you as a hub of something, but these are real KPI action that is serious, where there's a forecast, there's a team that's supporting this initiative. Now, having said this, I think it's also critical to recognize, right? The banks are not sitting still, right? And they recognize the competition. But also the banks are also very aware about their internal structure, that they're just a big giant too hard to move. And a couple of things here is that now if you see the structure, and normally when I enter a bank, I will ask about the org structure of the digital bank versus the technology and operation group, right? Where if the digital bank is independently reporting all the way up to the CEO to the CEO versus under your technology and operations team, well, I think structurally it's interesting, right? And if there's a certain KPI that specifically states that 1 head counts in digital replaces 2, then you will know that it's a highly competitive environment internally as well. Now, these are banks that we like to work with. And this is where, as also advice for fintechs, right? Banks, once the giant wake up, they're going to put a lot of money, put in their troops, the smartest guy all around the world, and go fight a battle on blockchain. This is where the real fight is. Well, the real fight is not happening yet. That's what I'm saying. And in addition to that, from the wallet side of things, the bank view it as not just a 12 to 24 months war where I'm a Facebook hit. I think they view this as a continuous journey, as a customer experience journey to serve their customer. So it's not a 12, 24 months fight as to who comes out on top. You know, fintech, we tend to have we are very fast, we are very agile, but we tend to think we are the king after 12, 24 months, right? And we go shout, tell me who is the guys that have 250 million users within 24 months. You're looking at the champion here. Well, you know, the banks act a very cautious manner where to say, I'm here to serve my customer that is here all the way from start to finish. That means he can be a young teenager all the way up to a grandpa, all the way. So I just want to make sure, you know, I cautious the timing, that yes, while the younger troops are making headways, but when the giant wakes up, the result is yet to be seen.
I'm gonna take a counter view on that because, I mean, this is a great, you know, like 12-year plan for rehabilitating banks, which I love, but it's probably not how it's gonna play out. So first thing, I mean, we're moving from an era of banks to an era of banking, meaning consumers want to consume services directly. They're gonna connect directly to the providers. They're gonna do it over the blockchain the same way that we're connecting to e-commerce or communication tools over the internet. And so the banks are gonna survive. There's really only one strategy for that, is technology. It's to realize you're not a bank, you're a technology company. And there are a few that are understanding that and are trying to maneuver that way. There are a few that are flanking it and are building a technology company first and then dragging the bank into that. And there's a few that are going to stay on the sidelines.
Okay, let me ask a question that I think the banks would be interested in hearing the answer to. How can companies get comfortable selecting a fintech startup for a long-term strategy or long-term relationship, given the risk of working with a startup? Dusan, let's go back to you.
I didn't get that, sorry.
So the question is, how can companies get comfortable in selecting a fintech startup for a long-term strategy or a long-term relationship, given the risk of dealing with a startup company, that the startup company might not exist in a few years?
So I think very early stage, I guess the question is kind of raised. I think it's a hard one, right? I have seen a lot of banks and insurance companies when we go into and actually pitch our companies that if you don't have the kind of real user case that they can see and identify themselves, they kind of walk away. So I think, you know, references is key. And the more the reference is exactly in the vertical where the other company is, the easier. So this is actually applicable to B2B fintech, what I'm saying right now. So it's kind of, if you're a startup, you go there and you have to pitch, no matter if you have to pitch to an investor or to a customer, you kind of have to pitch to the customer exactly the same user case to him again that you've done to a competitor. Then they feel comfortable. And they also feel comfortable, obviously, if you have financial backing, so you won't go bust tomorrow. So these two things are really important on the commercial side. And on the investor side, it's actually very similar, because the investors will be attracted if you signed up some big customers and you can see some kind of recurrent revenue. But that is only an answer to your question on the B2B side and not on the B2C side.
What about the environment in this part of the world, in Asia, for fintech companies? I mean, which of the countries do you think has the best setup, the most friendly setup for fintech startups or fintech companies to develop? Shailesh?
Can I just add a little bit to what
Please,
Dusan
yeah,
said
go ahead.
before that? So I think, because it relates to this question too, a fintech company, whether you're starting up in Singapore or I think Malaysia, Thailand, or even the work we're doing in South America, any developing country is hungry, almost everywhere is hungry for fintech, but developing countries actually respond to fintech quite well if you have the following. As Dusan says, you have some investor backing or you have some understanding of the problem you're trying to solve. You probably have one or two early case studies. Perhaps you've given your product away for free, or you've managed to get yourself some sort of a pilot going on the back of which you build stuff. What's also essential in each of these countries is, and despite what I say about the banks, there are many, many banks out there who are open and hungry to actually partner. So Matchmove itself, we partner with, say, Yes Bank, one of the leading banks in India, Bank Philippine Islands in the Philippines, Thanachart Bank in Thailand, and so on. We have partnerships all across, developing across Europe and now South America. Banks are essential, I think, for fintechs to get in. The danger now, and this is to the other part of the question, some banks, and certainly at a country level, are more hungry or perhaps more desperate, and they are willing to try something new. Now, the reason for desperation could be because they're worried about their performance review next year, or they're worried about losing market share, whatever it is. If you try enough and you just pitch away and pitch away as a startup should, sooner or later you will come across somebody who will say, okay, I think what you have is what I need. Probably my IT organization is too busy or screwed up to be able to deal with this, and let's get on with it. That actually applies in every single country we've dealt with. So I wouldn't say there's any particular country in that respect when it comes to appetite to partner with fintech banks. So then the second factor is regulators. And it's the regulators who will, I think, to a large extent determine how quickly this works. Once again, if you have a bank partner, they have a certain element of trust, they have relationships with the regulators. If you get the right one, they'll deal with the issues with the regulators. But at this point, I'd say, and Matchmove is very, very pleased, very fortunate to have our headquarters in Singapore. Because the Singapore regulators are a little more ahead of the others. But that said, Singapore regulations are essentially for Singapore, which is a very small country. And if you want to be fintech, you want to be big, you have to have big regional or global ambitions. And for us, the big markets are outside of Singapore.
Yep.
And once again, the two factors apply. Can you find a bank desperate or hungry or agile enough or interested enough to at least give you the first shot? Once you've got that, we find the momentum builds very quickly, and we're able to scale very fast.
Yeah. To add on to Kailesh's point, I think that's a very important point, right? And that's why I started by saying, this is a Kairos event, when I'm seeing that even the regulators are beginning to take a very open stand. Well, it's going against slightly their DNA, but they're really trying, regulators that is really trying. And I'm glad that it's happening out here in Singapore. Just last week, I was in London to witness the signing of MAS, and together with UK FCA, on the first ever global fintech bridge agreement. So what essentially this does here is that cross-country banks projects that has been implemented with innovation, the FCA is keen to take a look what MAS has done and vice versa. And that's extremely exciting. And this is to a period of 3 to 6 month sandbox. Now, if you have that environment where the regulators are beginning to understand the need to innovate. Now, back to the previous question as to how a fintech can maximize and capture this Kairos opportunity here is to very much start working about how can they either partner with banks. And why is this important? Because I was just in London and was hosted by the top banks, HSBC, Barclays Bank, and you know that you just head down to their website, right? There's all the innovation labs, they've been marketing and advertising all this while. But I asked a very simple question. They have made investment into fintech companies. So I just asked one question. How many of these fintech companies that you have invested in are integrated into your core networks? Make a guess. Dusan shake his head. I see a lot. Are you from the bank? You just shake your head as well. Absolutely correct. Close to zero. In fact, half. Well, that half was actually doing some scouting report. They say it's integrated to the bank, but it's just more external scouting report. But they say it's integrated. Here's the tough part about attacking into a big giant bank. So first and foremost, of course, each one of them are very busy and they have their own KPIs and their agenda. So the rule of a banker here is if you pick an IBM versus a tech startup, you won't get fired for picking IBM, but you'll get fired for picking a tech startup. So whoever that you identify as a fintech, as a champion, must take you from the start, stick his neck out to his boss stick his neck out, all the way to who? The global sourcing guys. And guess what? The global sourcing guy will feed it to the CFO. The business line unit, the CFO will all report back to the CEO. And if it's, particularly for my case, why I was able to work with both TPS and UOB, because we were dealing with 7-digit transaction. We were dealing with 7 global transactions. For me, as a 5-year-old security fintech company, to be able to deal with a bank, I spent, and that's why I'm in a suit here versus the rest of the gentlemen here, and I'm going to do this, and it takes 3 years, believe it or not. Just contracting with global sourcing effectively took 1 year. You think I'm kidding? No, I'm not, right? And it's a end-to-end process where, fintechs, you need, just like, you're attacking any opportunity, you need to be strategic about it. You need to find the opportunity and the moment. You need to be very clear in terms of your business case and your TCO. But you also need to be very clear that as you provide this with, of course, the regulators and government endorsement, it does help as well. But obviously, the first bank to move is normally the toughest bank. Because normally the other banks will say, have you deployed it with Bank A? I'm interested, but if Bank A have not done it, I'm not going to do it. No. I do not want to be the first. But you have this guy that is the head of digital banking that has been just employed 6 months in the job, and his KPI is to remove headcounts. Now you potentially will find a champion because his job is to remove him. So yes, he's my champion. And once you identify critically in terms of this positioning and deliver the value, well, we are right now kicking out a lot of traditional guys. But guys, if fintech with the aspiration to work with the banks, patience, perseverance, strategy, go read up Sun Tzu, the Art of War, it helps.
Let me ask a slightly different question to Ron. So where do you see the bigger opportunity, Ron, in terms of the fintech industry in this part of the world? Is it serving the many millions of people who have less good access to banking systems, not included in the current banking systems, payment systems? Or is it providing more sophisticated, more tech-savvy services to people who are already part of the banking network?
Yeah, I think, from a company perspective, there might be a difference. But from a consumer perspective, there is actually no difference at all. Because with one of the nice things with delivering services over mobile, you will be delivering the same service to somebody who is banked today and somebody who's unbanked. So as we're kind of rebuilding the infrastructure, rebuilding the applications, delivering new services, we're delivering them across the board. And one of the issues with banks actually is the difficulty discriminating who's going to be a valuable customer. Because if you're going to bring a customer into a branch and you're going to sign them in, your onboarding costs are very high, right? $20, $30, $40 as a customer comes in, then you start to think about what service mix you're going to be offering them, etc. When you're working with a digital platform, your acquisition costs look like a social product. You're bringing on a customer at a fraction of the cost, at a few cents. And if they're not transacting, or if their transaction volume is low, or if their amounts of transactions are low, it's okay because you don't incur that much cost. And if they're transacting high amounts, and if they're kind of in the top tier of customers, then you can extend a different set of services. So at least the way that we see the market, like if you're doing telecommunication, right, and if you're like WhatsApp, you're not going to be thinking, okay, I'm going to be building a WhatsApp for people who are, of this income bracket, and then the rest are going to be using that next product. You want a uniform network to connect everybody, and I think with money it's exactly the same.
Let's go back to Dusan. A question here from the audience. Will the rise of fintech be hobbled by legislation that constrains the same financial services firms that are supposedly being disrupted? And in particular, with this, the publicity about the problems of Lending Club is now having in the US, do you see a time coming when the fintech firms are large enough that regulators are going to start taking the same kind of interest in the fintech companies that they've taken in the banks since the financial crisis? Or is that still a way off?
I think it actually depends on what kind of service you have within fintech. You know, there are areas of fintech that are more regulatory sensitive and areas that are less regulatory sensitive. I think you're referring to the example of Lending Club, where clearly there was a misconduct within the company, and that will create a snowball effect. But quite honestly, it's not the first time a P2P lending company has had some scrutiny. When I moved over here, I think in 2014, we had 80 in those days P2P lending sites being closed down in China just in a month. And I think after that, there's been loads of them being closed down again, now and again. So I think whenever you see a revolution or evolution, whatever you want to call it, you know, it is going to be very disruptive, and some people will fail, some people will lose money, and eventually some kind of regulation will come into place. But I think it's part of the game. So I do think, you know, that in parts of the fintech industry, which you refer to, which is P2P lending, regulation will come sooner rather than later, because actually it's a pretty mature company. These companies are large. Zopa in the UK, they have 2% market share of the lending space. You know, it's starting to become mature. Whereas other areas are just actually being grown up. P2P insurance, you know, is just kind of opening up today or tomorrow. So I really think it's depending really in which part of fintech. Eventually, are they going to be regulated at the same time, the same way as the banks one day? Probably yes, because the banks are going to say this is not fair. And actually, they could keep saying it's not fair. But I think that mindset that we are talking about here is more a European and a US mindset than an Asian mindset. Because here, P2P lending is actually solving a problem the banks never solved. And actually, it's enlarging the cake for everybody and creating a whole new market, which actually is not taken from somebody else. So Asia is different. And I think particularly mainland China is different. And we are very, very different. I think we are driving innovation here. You know, in US and Europe, they say, where are the millennials? I want to understand what the millennials want. In mainland China, we have 757 million people on WeChat. They're all millennials. And they're all on mobile first. So don't ask me where the innovation is going to come. It's going to come from here. Then what is the second thing that actually triggers the innovation is actually Alibaba, by definition Alibaba. So Alibaba did something and Ant Financial did something in mainland China, then WeChat and Tencent woke up, then ICBC woke up, and then Alibaba does a deal here in our hometown more or less, which is called Lazada, and that's going to create a lot of innovation here. So if you ask me where the innovation is going to happen, it's going to be from mainland China and Southeast Asia. Now I'm talking globally and not only Asian. And I ask you one question. Actually, I always ask this question in Europe and actually in the US. How many of you, can you please raise hands, how many of you are on Facebook? Okay, so it's like 10%, 15%. Okay, how many of you are on WeChat? So we have 30%. WhatsApp? 30%. Okay. So my point here is that Mark Zuckerberg completely missed the payments opportunity on Facebook. So you were never able to do a payments on an account to an account on Facebook because he wants to create a virtual environment and entertainment company, which is great as a vision. Whereas WeChat and Alipay and I think WhatsApp Tomorrow are doing that. So if you really want to innovate within financial services, it's actually that specific interface, which is the mobile and social media. And you start with simple payments from person to person and will be larger and larger. And if we get that right and the blockchain piece, you know, we will be leaders of fintech. I think we are already leaders of fintech innovation. It's just that the world doesn't know it yet. And I think that is the most important message. And if the regulators then, because that was your real question, if the regulators then understand this, that this is creating a competitive advantage for Beijing, Singapore, and other cities, then you're actually building the whole industry around that, right? So for me, the regulators shouldn't regulate anything that these guys are doing until it's become so large enough that it's actually taking market share from the traditional players. Yeah. That I really believe in.
Thank you.
Well said, Dusan.
Thank
To
you.
add on, Dusan,
So, I'm afraid I'm going to have to end the session. We've already run out of time, and I apologize to the audience. There are a lot of very good questions here which I didn't have time to ask. So let me just wrap this up by thanking our 4 panelists. We'll look with great interest on the progress of your ventures in fintech over the coming months and years. Thank you.
Thank you very much.
Thank you.